Hello, this is Jordan. This video is being recorded on the late evening of Sunday, November 5th, 2023. Hope you all had a great weekend. And if you haven't already, please subscribe to the channel. I'm going to have a lot of great interviews coming in the days and weeks ahead. Thank you. Now, let's get into this week's video. And it's interesting for me because just looking at things in a vacuum, I'm looking at gold and I see a failed breakout, at least in a very short-term sense. But then looking at the miners, which I'll get to, they actually look bullish. I mean, everybody knows about the head and shoulder patterns. So looking at gold, here you can see recent candles, and we can see, I mean, here's the 2000 resistant. You know, this failed to hold the gain here. You see these, they're called dojis, where you have a close here, and then, you know, this is the high of the day. So when you get this, you see this in candles, especially after you've already had a move up like that, that's telling you the market is tired. It's telling you you're starting to see some distribution. And, you know, the black candles here, that's more evidence of that. Even last Friday, I mean, yes, gold was up. You have a bit of a white candle here, but it traded all the way up to 2010, closed at 1990. So failed to hold the gain. So the last week or two, we're seeing distribution around 2000. So in the very short term, that's not bullish. Looking at silver, I mean, there's been distribution. You know, this looks like it could be a double top here, but Friday you had this really strong candle where silver actually managed to hold most of the gains. So, you know, stepping back and looking back here, silver's clearly in this range. It has support here at 2250. It's battling the 200-day. I mean, here it went above it but didn't hold it. You had this day where the really ugly doji, and then the last couple weeks where it's a couple times it traded above the 200-day, closed below it. So at this point, I'm not really sure which way it's going to go in the very short term. I mean, you could see this kind of looks like a flag where you have this move up and this is a bullish consolidation, but you know, the larger trend is sideways to down, at least at this point. So you know, these flags, they don't come off of bottoms. They typically not typically, but they most always, you know, they follow bull markets and uptrends. But so anyway, for silver to be more bullish here, it would have to break higher. I mean, master of the obvious. But you get a solid break above the 200-day, a solid white candle or two, and then you're looking at 2450. On the other hand, you know, it's possible it could test 2250 again. But we're in an interesting, you know, we could be in an interesting macro situation where, you know, the stock market rallies, and, you know, in that scenario, silver can outperform gold, and also the miners can outperform gold at times. I mean, it's really, I don't want to get too nuanced in just one video, but those are potential outcomes. But anyway, back to gold. You know, let's talk about the support. So you have the 200-day here, just right below 1950. The 150-day, and the reason I have that here, if you remember a past video, I showed that almost before every major breakout in gold, it tends to test the 150-day 3 or 4 months, 2 or 3 or 4 months before it makes a breakout. Not saying that's going to happen immediately in the next, you know, week and then it's going to break out, but that's why I have the 150-day here. This was one of the only failed signals. It came down the 150-day, rallied, and then didn't work out. But I mean, if there's a bigger correction in gold, in a short-term sense, you're probably going to see 1940 tested, maybe even 1920. Initial support, I think, is around 1960, 1965. A 50% retrace of this move would be, let's see, 1820. So you're looking at, I don't know, 1930, 35-ish. So the 1940, that's going to be, I think, the strongest support in this area. But again, very short term, I think the path of least resistance for gold is probably lower. Now, for the miners look like they're going to push higher here. And that tells me, you know, if that's going to happen, maybe gold trades up to 2050 and it just, you get more ugly candles, but gold grinds up to 2050 and then it comes back and, you know, corrects back down here. And, you know, also in that bullish scenario, maybe silver it would push up to 24.50, maybe even 25. So that's the short-term bullish scenario being led by the miners. And this looks like a legit, well, we can't always go by looks, but this, to me, I mean, this is a pretty solid head and shoulders pattern. You have this, there's the head, the dual shoulders here. This is a weaker head and shoulders pattern because the right shoulder is lower than the left shoulder. So that's a weaker pattern of the neckline sloping down versus the neckline being like that. So looking at GDX, I mean, go back 10 years, 30 is a really significant level. You have the 200-day coming in here. So it'll be interesting to see if GDX, if there's going to be enough buying in the short term to push this higher. And actually, I think this measures to around 34. I mean, 33 is the next resistance area. So it's one possibility as it breaks out, but then it peters out here before it gets to 34. So that's something to keep in mind. GDXJ, so the target here would be about, you're looking at almost 40. If you take 30 and a half and then, 35, I mean, 40 and a half maybe. And so you have the resistance here at 39. And so, and also the 200-day here. So I'm more confident in this head and shoulders than this one right here. Looking at SILJ, the silver juniors, haven't charted this in a while. I mean, it's been ugly. But, you have a low here. Then it got tested here, tested again. Then you have a strong candle. So this could trend higher, I think, to at least 950. That's where the next resistance is. You have the 200-day coming down here. So, I mean, it could go like that, run into resistance. So, after this big move on Friday, maybe it'll correct or consolidate for a little while. But it's a difficult call here in the very short term because I don't like the short-term action in gold. But if you tell me gold is going to go up to 2050 before it has a bigger correction, that's going to be enough to get the miners to break this resistance and push higher. So not sure this is the start of the big move and the real bull market that we've been talking about, but maybe it'll bring us closer. Obviously, I haven't mentioned it, but the rebound in the stock market is concerning. And I mean, it's short-term concerning in that more money is probably going to come into the stock market and chase that rebound. However, if that rebound peters out and it's just a short covering rally and that fizzles out in the next couple weeks, that's going to be really bullish for gold and precious metals. So I know there's no clear analysis here, and it's a lot of what ifs, but that's how I see things. Let me know how you see it in the comments.